please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Well, that's the marquee deal that has dominated Mindspace over the last week of the year. But I guess what has dominated the year is the way in which equities have delivered as an asset class, and we've done as well as the best in class. We end the year with 30% in terms of gains as far as Nifty is concerned, and that makes us the the second best performing in Asia itself. Only Hang Seng is better than us with a 35% year-to-date gain. So excellent gains. Midcap, of course, has trounced all indices practically in the world with 50% in terms of gains. Well, to come back to the here and the now, I guess yesterday the market negotiated the fiscal deficit issue well, though it got mired in expiry. Maybe there will be a little more of sulking of finance stocks because even after our markets closed, the bonds fell further and we ended the day with 7.4% in terms of yields. So maybe there's a little more sulk on that ground, but I think a little bit of that will be made up, will be compensated by the actual announcement of the RCOM deal. Yeah. It is RelGeo, and that will make the finance stocks, you know, to that much better off, happier. So I wouldn't be surprised if today the markets actually take a hue of green, looking ahead to a Jan series, which is usually good for markets, considering that you will start factoring in budget cues.
Oh yes, lots to talk about, right? Lata, morning, Anuj, morning. And it's come a full circle for the two brothers, right? The Ambani brothers. In 2003 with that huge battle, and now it finally fructifying into this deal. But I just want to start the show by offering condolences to all the people and the families who passed away in that Kamla Mills fire that happened last night. It's so close to home, right? I mean, it's just next door to our office. So it was really gut-wrenching to hear about that fire early in the morning. So condolences to everybody, all the young people who lost their lives in that fire. Anuj, morning. We start on a very somber note, but for the market as a whole, you think you know, the trend of the upside that we've seen, that could continue?
Morning, Sonia. You know, one thing, you know, this idiom that blood is thicker than water. I think that clearly was the case yesterday with the Ambani brothers deal, and that too on the birthday of Dhirubhai Ambani. Yeah. So that, of course, was the talking point. But I think, look, on the market, one thing is clear, that we are now in a range, and what it looked like on Wednesday, that the market was breaking out, was a bit of a false breakout. This market lacks triggers to, you know, break out. It will get its trigger maybe and break out, but for now the broader range is 10,450 to 10,450. They have been the contours for last 2 days, the high and low. If you just see the data on the NSE, the Nifty high and Nifty low have been in this range for last 2 days. The problem for the market right now is the Bank Nifty. Now it's up 40% this year, but in last 5 months it's up 1%. So all the gains for the Bank Nifty were front loaded. January to July we had a 39% rally. July onwards we have had a 1% rally in the Bank Nifty. So you could divide the year in two halves, the first 6 months and the last 6 months.
Isn't that true even for the Nifty, that a bulk of the gains are front loaded?
No, they were, but for the Nifty at least, you know, it's been more sort of because the Nifty gains are only, you know, 25. I'm saying only because you know, in comparison to the Bank Nifty and the Midcap index. But for the Nifty also, of course, we went to 10,000, and after that, but still from 10,000 to 10,500, it's, you know,
actually comes to 5%, but then it did very well in the first part of the year.
So, you know, the limited point here is that the biggest component of the market is struggling a bit, and it's struggling despite, you know, stocks like HDFC Bank doing reasonably okay. ICICI did reasonably okay yesterday. I think the PSU banks clearly is a bit of a problem for the market. A couple of others like Kotak, IndusInd at high levels do see selling pressure, Axis for example. So what do you do in a market like this? Again, it's a market which is not falling. So it's gone up 1%. But the Midcap index, they've had a secular run. Even this month, the Midcap index is up 5.5%, and 2017 it's up 46%. Bit of a dangerous game, but you got to take some risks in equity markets. So I still believe that you got to go and buy mid-caps and maybe hedge yourself, have risk management in place. For today, maybe commodities could be the space once again to focus on, because copper prices, aluminium prices once again are rising, and you got, you know, decent plays here to play. So I think that would be the place to be in. I think 2018 really is interesting when we'll have that cross sort of you know, platforms that we were discussing yesterday.
Oh yes, the
when
integrated
exchange, you could trade metals, you know. So on a day you want to just straight away trade metals and not get into the business of, you know, finding a proxy of, you know, Hindalco and Alco and all. You could straight away play. I think that really is going to be interesting.
Oh, absolutely. I mean, new age, right? You can trade commodities, you can trade stocks, all on one platform. So 2018 promises to be very exciting. Let's savor the year. It's the last day of the trading year, so we're going to tell you what our experts have to say, as always, as we head into trade this morning. Mark Mobius, the best of the best of Templeton EM Group, has written about the emerging market outlook for 2018. He says these are exciting times for emerging market investors. Their top themes are technology and consumption. Mobius adds that there appears to be more room for EM corporate earnings, that's emerging market corporate earnings, to recover. And considering the valuation of EM companies, they still look very attractive.
Okay. And there's more from the equity markets. Rhythm Desai of Morgan Stanley is looking out to the first quarter of the new year, sees improving growth indicators, rising earnings revisions, headway on NPL resolutions, GST rate cuts and continuing infrastructure capex as positive triggers for equities. Bunched up equity supply, fiscal challenges, bond market volatility are the likely headwinds. Rhythm opines that market participants will likely be focused on the upcoming union budget, the state elections, all of which are non-BJP ruled states, the monetary policy where they see no rate cut, and the global market trends. Okay, full plate.
Okay, well, let's also get you some money market views as we head into trade this morning. Bhaskar Panda of HDFC Bank expects the dollar INR pair to trade within a range of 64 to 64.15 for the day.
But I think it's the bond market that might rule mind space today. Bhaskar Panda says speculation about possible higher government borrowing is keeping bond markets guessing. He adds the yields have shot up and may now be moving higher, says the 10-year benchmark bond yield may inch towards the 7.5 mark slowly. Expects the 10-year benchmark yield to remain in the range of 7.36, 7.45 today. Now that's also saying a lot. Yesterday it was 7.399 something. So one was hoping that that would be the worst. Let's hope if it turns back.
Okay, one constant theme in 2017 has been the US markets hitting new highs practically every week, sometimes almost every day in last few months. Here's Nigel with the world view.
Well, Anuj, that just continues. US markets, they ended yet at another record peak. And remember, they're on track to end this week. In fact, it'll be a 6-week winning streak for the Dow. And that'll be the first time we have seen that in the last 5 decades. The last time we saw this was in 1954 approximately. Well, in yesterday's trade, a couple of big gainers. IBM was on the winning list. We had United Health as well. That did very well. And I told you about the Dow. Keep in mind the S&P 500. Every month this year, it's given you money. So that's on a winning streak, and that's the first time of sorts in a calendar year. Well, volumes were very, very low as expected. Second lowest trading volumes that were seen on the US markets. Shifting focus then to the European markets, they ended more or less lower. A mild outperformance came in from the FTSE. But over there was one stock that was in focus. Well, Airbus was a bit lower in trade on reports that, in fact, the company will axe production of A380, the Super Jumbo. So that stock was one stock that was in focus. Asian markets today, well, they're trading more or less in the green. Remember the Nikkei, that's one market you should be looking at. It's trading with a gain of around 0.3%. The other couple of markets as well doing well. And the Nikkei, remember, they're on track for a 6th straight calendar year in terms of gains. Remember, these are the last few years. 2012, it was nearly around 23%. And for this year as well, 20%. So 6-year winning streak for the Nikkei. The SGX Nifty as well is indicating a more or less flattish start. Back to you all.
Okay, thank you very much for that, Nigel. Well, we've been saying that mid-caps were the toast of the markets this year. For the last part, I think maybe for the last 2 weeks, it has been the leveraged stocks that have been doing extremely well. And I think they have got a huge leg up from the RCOM deal itself. One of the big leveraged stocks finding buyers, and that has lent wings to the JP Associates, the Amtex, the entire lot that is in the NCLT or even out of the NCLT but is in beleaguered status. That's definitely given wings, and that is our big story of the morning. Comes from the Ambani stable. On the 85th birth anniversary of Dhirubhai Ambani, both the brothers, I mean, indeed, their companies have agreed to a handshake, a deal. RCOM has agreed to sell most of its wireless business to RelGeo. Here are some reactions that we got for this mega telecom deal from the best experts in the industry.
So very clearly, in line with what the consolidation scenario of the industry has been heading towards, again, RCOM has significant assets, and it's a good thing that it was bid out in a very transparent manner. And I think the bidding shows that, one, the remaining players are very keen and are now strategic in nature in terms of going forward. So I think the emerging landscape of the three dominant players, which is Jio, Airtel, Voda, Idea combined going forward, is going to be the landscape of the operator community going forward.
As far as pricing is concerned, it's a function of many things. Number one, of course, obviously rationality is somewhere there as one of the factors. But there is a question of the competitive pressures and the competitive strategies that different players are adopting, number one. Number two is the fact that pricing also depends on what exactly is the business model that you have. New incumbent always tends to be a little more aggressive because they have to actually grab market share.
Going forward, you're going to see many more acquisitions and deals like this. In today's case, it might not be an all-out share purchase. It might be buying spectrum, buying the tower business, buying other assets. But with the likes of what you saw with Idea and Vodafone,
exactly,
I think you'll see a lot more consolidation happening in that sector.
Wake up to some fairly subdued cues from across the globe. The SGX Nifty is absolutely flat as we speak, and our own markets have also been in flat terrain. That's how we ended yesterday. Let's see what today morning throws up. Our research team is here to give us that very list of top 10 stocks for the day. Anuj, what are you looking at?
So, Sonia, Radico Khaitan is the first stock to watch, and not because it's Friday and last day of the year. It's, looking strong as a stock. Had a strong bounce from 20-day moving average yesterday and has seen strong delivery-based buying. So that's my first stock to watch. Midcaps mostly. Ujjivan is the other one. Ended at high point yesterday in a weak NBFC market. I think I always, look at some of these stocks which managed to buck the trend and is trading above the key averages. So that would be the second stock to watch.
All right. Reliance Communication, of course, will be on everyone's radar, as it has been through this week. Has agreed to sell most of its wireless businesses to RelJio. The deal will add some impetus to Anil Ambani's debt reduction drive. But how much it adds to RelJio's assets is what the markets will be worried about. Kritika Saxena joins in with just the details that were announced by the two companies yesterday.
Well, on Dhirubhai Ambani's birth anniversary, Mukesh Ambani's Reliance Jio has bought some of the most prized assets of Anil Ambani's Reliance Communications. Let me take you through them one by one. First and foremost and most important was the 122.4 megahertz of 4G spectrum that has been bought. And this is the entire 4G spectrum that Reliance Communications has. This was something that Airtel and Jio were neck to neck for. Even Vodafone and Idea had thrown their hat in the ring, but Jio has obviously emerged the front runner, and this puts them a tad ahead of Bharti Airtel in terms of the 4G footprint that they have. The other areas will help Reliance Jio to complement their current services and bridge the gaps that they had in terms of network infrastructure. So instead of putting and setting up an entire infrastructure, they have gone ahead and bought 43,000 towers of Reliance Communication, 178,000 of optic fiber pan-India, and 248 MCN, that is the media convergence nodes, which cover about 5 million square feet. Now these three areas, tower, MCN and optic fiber, will help Jio bridge gaps, as I said, and clean out any kind of glitches in terms of network capability that they had. All the prized assets of Reliance Communication have now been bought up by Jio, and what's left essentially is some equipment business, 3G business, some smaller portfolios, some areas as far as spectrum is concerned, which perhaps we will see announcements for in the days to come, but the big chunk has gone to Reliance Jio.
Okay, but the bigger point here is that the fear was that Relcom would be an NPA. So if that is not the case anymore now, in that case, how does it impact banks? That would be the important point, Lata.
Well, clearly the four big banks that are exposed, SBI, the leader of the consortium, and the next highest three are PNB, IDBI and BOB. So you would see a bit of a relief. But I can tell you this much, when you spoke to bankers and asked them whether you will have to provide for this quarter, there was a sense of, you know, you could very clearly make out that, yeah, we will have to anyway write it back. We will provide now, but it will be arithmetic and they will write back. The only niggling worry is whether all the 45,000 crore will be taken care. There is still that, you know, when you talk to people, everyone is not in the know. So they don't know whether this deal will be 25,000 crores, 23,000 crores, 24,000 crores or less. And how will the land deal work out? So the provisioning, will it have to be done for 2 quarters, you know, for the year as a whole? But much of it will get written back. So today, considering that the person with the deepest pockets is bought, clearly there will be relief on these stocks.
And what about on Reliance Industries? I mean, we haven't spoken about that. The leverage will definitely go up, but any kind of impact there today?
Well, it's, you know, Reliance Industries has cash of 75,000 crores.
Yeah.
So, you know, taking over a debt of 25,000 crores is not really moving the needle much. But yeah, it is definitely higher leverage. So I would be surprised with a green on that stock.
Okay, well, let's move on from this deal. We're going to be talking about it all day, but we have to talk about other things. JP Power is in focus as well because of its assets on the block. Anisha joins in now to tell us what's happening there. Anisha, go ahead.
Well, yes, Jaiprakash Group is ending the year with good news because remember, we understand that Kotak and Brookfield have jointly bid for 2,200 megawatt worth of assets for Jaiprakash Power Ventures. Now, the equity value of this deal can be around 3,500 to 4,000 crores as reported, but we don't know in terms of the valuation how does this fare because we don't know what kind of assets are we talking about. But it is a positive news not only for the company which has been debt-ridden, has been under ACR, but also for its lenders because remember, more than 51% of the stake is held by its lenders, with ICICI holding anywhere between 13 to 14%. So comes as a good news for the investors as well as the lenders. The stock has been buzzing for a while, but I expect it to hold up in the green today as well.
Thanks a lot for that, Anisha. JP Power, of course, JP Infra has been the strongest of the JP Group stocks. Ekta, why are you watching out for Lupin?
Well, there is more competition for one of their key drugs, Fortimet Generic, which is a diabetes drug. Now, remember that we've been talking ad nauseum about how Lupin's 2 diabetes drugs, Glumetza and Fortimet, used to be their mainstay for their earnings in the US. But last quarter, we saw a 34 million Q-on-Q decline in the US sales simply because of the incremental competition that we saw for Glumetza, Fortimet, as well as Ministrin. So what the news today is that another pharmaceutical company has received approval for Fortimet Generic. So that means incremental competition and faster competition coming in for one of their key drugs in the US market. So that would probably be a bit of a red on Lupin. I also want to add that the Q2 transcript clearly mentioned that the competition for Fortimet was not expected for the next couple of quarters, except for maybe Aurobindo when the management was quizzed about it. So this would be something that probably wasn't even factored into numbers.
Oh yes, in fact, Lupin has been such a big underperformer, down 40% this year. And now with extra competition coming in on its products like Fortimet, things are going to get tougher. Thanks, Ekta, for that. Nigel is also with us. He's going to tell us why he's watching a relatively smaller company, Amulya Leasing, today. Nigel?
Well, Sonia, the reason that we are watching this company is because yesterday there was a large trade that did take place. So Amulya Leasing is the company. In fact, it's a micro-irrigation company, and in fact, its name will be changed as well to Apollo Pipes. That's what Naveen tells me in the new year itself. Now, yesterday there was a large trade. The promoter, that is Samir Gupta, is the MD of the company. He sold his entire 17.6 lakh shares. That amounts to nearly around 35%. But just take a look at the buyers. Some of the biggest names are over there. Mr. Bansali is in there. We have Param Investments as well, that's in there. And even Fidelity Investment Fund, they bought as well some shares in yesterday's trading session. Now, the big point is if 35% changes hands, who's the new promoter? Is there an open offer that will, that will follow up from here? We reached out to the management. They're not commenting as of now, but we'll try to get you the management maybe today, later in the day. But the stock should open up in the green just looking at the pedigree of the buyers.
Nigel, thanks a lot for that. That's Amulya Leasing, and very well told by Nigel that while the name of the company is Amulya Leasing, it's essentially into pipes, and they'll be changing the name as well. But the big macro story for last 2 or 3 days, apart from crude, really has been the way bond yields have gone up and showing no signs of retreat actually, and that will have impact.
My only regret is yesterday, even after the equity markets closed, when we were closing, it was at 7.35, and in the balance 1 hour, it went on to 7.4, 7.396, as you can see. And there are people who are talking very freely about 7.45 pretty quickly. the markets are really waiting for some action from us or statement from the government or RBI. RBI can do a lot with its open market operations. It can indicate that I don't like the bond yields so high, and therefore I'm coming and buying bonds in the open market. And OMO purchased by RBI can always mean, an indication that they are uncomfortable. So the bond market is complaining that unless there is an action from the regulators or the policy makers, bonds may continue to sink. If it indeed goes to 7.45, then you must watch out for, stocks like Capital First, stock like MMFSL or L&T Finance. There could be a bit of pressure on the NBFCs.
Okay, so we'll watch out for the NBFCs and how they react to that today. Here's a quick recap of our top stocks expected to gain. Are names like Relcom, SBI, IDBI Bank, Bank of Baroda, PNB, Radico Khaitan, Ujjivan Financial, JP Associates, Amulya Leasing, while stocks expected to be under pressure today, Lupin, L&T Finance, Capital First and M&M Finance.